In this lesson, I am going to teach you one of the most important concepts in price action trading, market structure. Once you understand market structure, you will know how to identify trends, spot reversal, understand break of structure, change of character, and distinguish a real breakout from a false breakout. So let's begin. First, what is market structure? Market structure simply is the price movement, is the movement of price. Everything price does is based on highs and lows. There are three main market conditions, which are the main market direction, which is uptrend, downtrend, and ranging trend, which is the consolidation trend. So the uptrend consists of higher high and higher low. The downtrend consists of lower low and lower high, and the ranging trend doesn't have any highs or lows. So we say that uptrend is made of higher high and higher low, higher high, higher low. So as you can see in this diagram, you can see that this is an uptrend structure, which is made of higher highs and higher lows. So as you can see, this is the low. This is where the market started, and it went to this high and returned to this low. So went from this low and went back to the higher high. So this means that this high here is lower than this high. This high here is higher than this high. This high here is higher than this high, and this high here is higher than this high. This is what makes it an uptrend. And as you can see, this is a low. This low here is higher than this low. This low here is higher than this low. This low here is higher than this low. So this is what makes it an uptrend. The higher, the highs, the next high will be higher than the initial high. The next high will be higher than the initial high, and to the low side, the next low will be higher than the initial low. The next low will be higher than the initial low. So the direction is an uptrend. So this means that uptrend is formed when price continues to create higher highs and higher lows. So to confirm that this is an uptrend, you can use your trend line to mark out the lows, and to mark out the lows, okay, and you mark out the highs. So from the trend line, you can see it's an uptrend. So trend line helps us to confirm that the direction is upward. So this means that buyers are more in control. Buyers are in control. So your interest should be more of buys. You should be looking for buy interest. This helps you. It gives you, this shapes you to know the direction of the market when entering a trade. So let's go to downtrend. We see that downtrend consists of lower lows and lower highs. So let's go to the high side of this image. This is a high. This high here is lower than this high. This high here is also lower than this high. This high here is also lower than this high. Let's go to the low side. This is a low. This low here is lower than this low. This low here is lower than this low. So downtrend consists of lower highs and lower lows. So this means that the downtrend is when price forms lower lows and lower highs. It shows that sellers are currently in control, and your interest should focus on sales. Your interest should focus on sales. Using the trend line, we can mark out using the trend line to know our direction. So let's draw from the high. Okay. Then let's draw again from the low. So according to the trend line, it's showing us a specific direction, which is downtrend. So it means that in a downtrend, sellers are in control. The next one is the range trend or the consolidation trend. In a ranging trend, neither buyers or sellers are in control. So the price moves between support and resistance. Um, example, this is um, the market moves from this low to this high, comes back to this level, this previous level, goes back to the previous high, then returns back to the previous low, and it continues like that. So it means that the market is sideways. is moving in a sideways direction. It shows a sideways movement. Most traders lose money here because of the trade every move. Most traders they trade every move, so the market keeps reversing, going up and going down, going up and going down. It doesn't have a specific direction. So you can identify a ranging trend using this trend line again. Um, you mark out the highs that touch each other, and also mark out the lows. So according to the trend line is moving in sideways direction. It doesn't have a specific direction or upward or downward direction. Now let's look at swing highs and swing lows. Before we go in identifying the swing high and the swing low, I'll be explaining what a swing high and a swing low is. So a swing high is a point where a price stops moving upward and starts moving downward. It is the highest point before it pull back. While a swing low is where a price stops moving downward and start moving upward. It is the lowest point before a price rally. So as you can see this image, you can see that this is an upward direction, and the market moved from this point to this point and immediately started moving downward here. So this shows that this point is a swing high. These candlesticks are not a swing high. Look at the swing high. This next one is a swing low. This next one is a swing low. These ones here are not swing low because it's not valid. But you can see market went straight to here. This is a swing high. Came back to this zone and pulled reversed up, means that this place also is swing low. So let us identify the swing high and swing low in this diagram. So this is a swing high, this is um, a swing low. Yeah, this is a swing low. This is a swing high, and this is a swing low. Yeah, okay. This is also a swing high. So when talking about market structure, swing high and swing low are very important. It also tells you where the higher highs and higher lows is. Before knowing higher high and higher low, lower high and lower low, you will need to know your swing high. You need to mark out your swing high and swing low. Then it shows you a specific direction. Your swing high will also help you to know when a change of character is formed. When a trend breaks the swing low or a swing high, that means that the trend is about to change. So in the next video, I will show you how to know and identify your change of character for church. Now let's look at how to identify a break of structure. First of all, a break of structure happens when a price breaks a significant swing point in the direction of the trend. Example, um, in a buy trend, there is an uptrend which is the left one. If the price breaks the previous high, this is the previous high and the price came down here and breaks it. Um, this point that it breaks it is the break of structure, which is your BOS. While in a downtrend, the price was moving and this previous low here breaks this low here. This place is called your break of structure. The same thing happens here. The price went up and broke this previous low here. This is the previous low. So the price broke it and continued the downward movement. This point here is your break of structure. So a break of structure happens when the price breaks a significant swing point in the direction of the trend. In the buying trend, which is this uptrend, it means that the break of structure signifies that the price is going to continue the bullish movement. So generally, break of structure shows that price shows the continuation of price. If it's a bullish movement, like this is a bullish movement with an uptrend, which means that this break of structure shows that the price is going to continue the upward movement it may come back to this BOS and continue. So it shows us that the buyers are still in control. We can still find interest for buy. While the downtrend BOS shows that sellers are still in control. The market is going to continue the downward movement. So break of structure generally shows us that the continuation of the market of price. It shows us confirms that the market is going to continue the movement. So BOS confirms continuation. Thank you for watching. Generally, break of structure, which is BOS, confirms continuation. Example, in this uptrend, this is an uptrend. Okay, the BOS where break of structure shows that the price is going to continue the upward movement, going to continue the buy. Why this is a bearish trend, that is a downtrend. It means that this BOS signifies that market is continuing the selling. So for sellers, since the sellers are stronger here, so for a trader, this break of structure shows you that they are going to be monitoring, continue monitoring sell interest. Why this uptrend for traders to show that they are going to continue searching for buying trade. So generally, BOS confirms continuation. So let's look at change of character. Change of character is the first warning that the trend may be changing. Example, in an uptrend or a downtrend. This is a downtrend. In an uptrend, if price breaks the previous swing low, is identifies a change of character. While in a downtrend, if price breaks the previous swing high, um, it identifies a change of character. Note that change of character is the first warning that trend may change. So it's not a confirmation, but it's a clear warning. So in this image, you can see that this is a downtrend. Let us mark out the highs and the lows to show us a clear direction. So this is the downtrend, the downtrend. So as you can see in this image, the price came down to this point and went up and breaks this previous swing high. This is the swing high. This is the swing high. So the price breaks the swing high and continues upward movement or direction. So this means that this point from here to here is your change of character. This is where the price broke the initial swing high. So change of character is called your CHOCH. That's a short form of change of character. So this is your change of character in a downward trend. So in an upward trend, reverse is the case. So change of character is where the price broke the previous swing high in a downward trend, while in an upward trend, it broke the previous swing low. Thank you for watching. So let's look at the difference between a BOS and change of character. This is where many traders get confused often. So first, this is a change of character. Change of character confirms that and the trend is about to change to this is a bearish trend. So it means that the trend is about to change to a bullish trend. So the change of character broke the previous swing high in this downtrend. So it broke it and started moving upward. So it means that this trend is about to change. It's a warning sign. Why a BOS is a continuation of the trend. This is where the previous low breaks it, this is where the low breaks the previous low. For example, let us say you can see this is your BOS. Yes, that's your BOS because this price broke this previous low. So it shows the continuation of this downtrend. So after the continuation of the downtrend, the market started moving up, then broke this previous low and started moving up. So this is a change of character why um, this place is your break of structure, which is BOS. So this is your BOS. So BOS has a clear difference um, there's a clear difference between BOS and change of character. BOS shows the continuation of trend, while change of character warns us of possible reversal. Thank you for watching.